Hey everybody, Chuck Barone. Wednesday, March the 29th, 2023. Midway through a pretty decent, quiet week for the markets this week. Not a lot of turmoil, not a lot of drama. It's been well, there's been some fun happening up on Capitol Hill, but the markets overall have been pretty decent this month so far, this week at least so far. Now, we know the next 2 days are the big data days, so we'll see what happens. But anyway, I babble. As always, before we start the show up, I just want to welcome everybody and thank you guys for viewing these videos. We appreciate your guys' support. We really do. These markets today, well, pretty decent day for stocks. Stock market has a nice little rally. I guess the sentiment on Wall Street is that this banking trouble is behind us. I don't know if that's actually going to be the way things work out, but I think that they feel like the bigs have an appetite to scoop up the, do the vulture stuff, right? Scoop up the carcasses of these regionals as they go down. Wall Street pretty optimistic right now. Dow up 323 points today, looking great. Chart looks great all day too. The Dow 323, S&P up 56, the Nasdaq up 210 points. So across the board rally for stocks today, pretty nice day. The bond market today, not a lot of action in the bond market for a change. A quiet day in bonds, yay, bond market. Basically a flat day on the bond market. The 10-year settling at 3.57%, up just 1 basis point. The 2-year at 4.10%, 4.1%. That's up 4 basis points. So actually a normal day in the bond market, pretty nice. This yield inversion kind of narrowing down. Remember, it was like 108 points? Well, now it's narrowing down quite a bit. We got about 50 basis points, so it's half of what it was. Very interesting scenario in the bond market as the yield curve starts to flatten out. Let's see if it stays that way, moves more flat, or kind of gets back to the inversion we're all kind of been used to for the last year or so. The dollar today up very small. Not a lot of action in the dollar. Still just hanging right along. 102.68 on the index. Basically flat. It's gold and silver metals today. Not a great day. Nothing dramatic though. Gold down $10.40, $1,963.40 per ounce. Silver down 1 penny, $23.31. There's been a little bit of resistance. I think there's some profits being taken here in metals. I really believe you're going to see 2,000 gold. I believe you're going to see $25 silver. Just waiting for a reason to happen. It's going to happen soon. Oil, not a lot in oil. Down small today, down 21 cents per barrel. West Texas Intermediate, $72.99. Still in that higher number between 70 and 75. We'll see if it stays there, or if it doesn't, which way it breaks out. My guess would be more likely to the downside. Bitcoin today, nice little rally up, $968 last I saw, 28,376. 30,000 Bitcoin coming up here, I think. Looks like Bitcoin has a lot of support in this market. The cryptos have not been getting very good publicity. The Wall Street Journal, the traditional media, I guess, for finance, hasn't been super positive. One negative after another. But it looks like the market for this is starting to stabilize. Pretty impressive showing. News you guys need today. Not a very quiet day, but a couple of things. First across is real estate actually starting to stir a little bit here. I think that, I've been complaining about the situation in real estate here in Las Vegas, especially for about a year already now. This market's been frozen out where first-time home buyers can't buy houses unless they're willing to take a eye-popping payment. But it looks like, people are settling down. Rates have come down from the 7s to the 6.5-ish range, somewhere in that ballpark. So people now just starting to kick tires on real estate. I'm actually even getting some calls in my office, finally, yay. There's a lot of pent-up demand right now. People want to buy houses. People have some money put away for that purpose. It's just they've been waiting to see which is going to come down. Is it going to be rates coming down? Is it going to be prices coming down? Because one or the other has to give. It still does. Right now, the way the market's been behaving, it's been prices that have come down. We've come quite a ways down from our peak here in Vegas. We were up 482. That was a massive, crazy number, peaked. We're down to about 412 now, so prices down about $70,000 from the peak here in Vegas, but still too high. So even with rates at 6.5, still too high. So we'll see now. It's interesting, and it's nice to know that that demand is there. And as soon as this market can get straightened out, there's going to be a big burst of activity in real estate. It's not going to be, it's been kind of just laying there for so long, creeping along. I think when it starts to recover, the recovery is going to be a quick one. It's just going to be an all-in-one big burst of activity, and it's going to be all on again with real estate prices starting to climb. Crazy, crazy, crazy times, man. I remember the days when real estate was, 2%, 3% a year, was pretty consistent. It wasn't the big casino like it is now with, real estate going up more than 10% in a year. It's just houses going up $100,000 in a year here in Las Vegas. Completely crazy, unsustainable stuff. Hopefully it'll get back to more of a normal type of market where you can see consistent, steady gains, much smaller gains, a more consistent market, not one where it's just all over the lot, man. I mean, we have people now, big winners and big losers in this real estate market. It's back to, the bad old days, right? But anyway, nice to know real estate's starting to pick up a little bit. We'll see how that continues here. Second, interesting article I was reading today. Lots of economists now starting to come out talking about what I've been complaining about on this show for a long time, this greedflation. How businesses are taking advantage of consumers, using inflation as a justifiable excuse to continue to raise prices, even when their own prices are the same or falling. Still raising prices, blaming it on supply chains, blaming it on, wages. Oh, it's those damn workers wanting to make $10 an hour. They're blaming it on everybody. And you got the bankers and the Fed. The Fed doesn't want to point to corporate greed as a big driver of inflation. How do you solve that problem? That's not an easy one. So they're pointing at the employees too, saying, it's wages that are driving this inflation. It's bullshit. Well, maybe a portion of it, small portion, but the wages are not rising at the rate of inflation, guys. So I don't really know how accurate that really could be. But corporate profits, since the first quarter of 2021 through 2022, so between 21 and 22, that 2 calendar years, corporate profits up 28%. 28%. And still rising this year, margins up, highest margins since World War II. And then this tells you the story, man. You don't have to be friggin' Sherlock Holmes, right? Corporations are making record profits in the face of a recession and high interest rates because they're getting away with gouging. I mean, gouging might be a strong word or even a negative sounding word, but that's what they're doing. They're taking advantage of the situation to make extra profit for themselves at our expense. And of course, though, they don't want to talk about that. They want to blame it on everybody else. So they get us fighting about that. It's the red team, it's the blue team's fault. Not what it is. The corporations are overlords. So I just thought that was interesting that it's not just me calling that out anymore. It's starting to move into the mainstream now. Who knows? Maybe they'll find a way to, shame these businesses into behaving more in tune with their constituency, with their customers, right? Giving a crap a little bit as much about the consumers that use their products and buy their products over and over as they do about their own greed or inflated bonuses. Interesting times, man. Living history, guys. Fascinating stuff today. On Capitol Hill, we got Starbucks, former CEO Howard Schultz, the union busting king, getting beat up. Bernie Sanders versus Howard Schultz, man. Talk about oil and water there, man. Wow, right? But, Starbucks, as most of you guys are at least aware of, big unionization organizing going on at Starbucks. Of course, their corporate people, Howard Schultz, most vocal among them, trying to do everything they can do to stop this movement, bust these unions down. I mean, using tactics we haven't seen, since the friggin' 20s and 30s when unions were really starting to grow. Crazy stuff, closing stores if they try to unionize, firing people who were unionizing, doing everything they possibly can do, legal or illegal, to prevent the unionization movement at Starbucks. He, of course, is on the Hill swearing that the company hasn't broken any laws, not doing anything wrong, but he didn't mention that they have more than 80 complaints for labor law violations. And they have to the National Labor Relations Board, more than 500 unfair labor practice complaints. So these guys are, it is what it is. Corporate America has had it their own way for a very, very, very long time. They're not even used to any resistance anymore. They've got everybody convinced that anything that goes against our beloved job creators is bad for us somehow. This what's good for GM is good for the country mentality from Dwight Eisenhower. And that might have been true in Ike's day when, tax rates were above a certain number, were 90%. They didn't let the CEO make $200 million while the employees are basically making less today than they did in those days if you adjust dollars for inflation. Average Joe, us, the schmuckatellis, guess what, man? The household income, inflation to 1980 to today is basically the same. So fascinating stuff. At least these guys getting a little bit of comeuppance. I mean, this movement, this great resignation, workers actually, more people now looking to do freelance work, doing gig work, opening their own companies, working as independent contractors, taking responsibility for their own lives and incomes. Going to be tough for corporations to keep having it their own way, the way they have. You can see that with the resistance they're getting on this back to work orders, not really working too good, lots of resistance there. So fascinating stuff. This union movement, I really believe, is here to stay, guys. It's not going away. Workers want to earn a reasonable wage, and $10 an hour, even $15 an hour, is ridiculously low wage. $15 an hour are going to get you $600 a week before taxes, $2,400 a month before taxes. Hard to live a real lifestyle if that's what you're making, right? Anyway, I babble. I do that. Sorry, but I just think it's time that, I'm not a big fan of some of the practices unions have, been engaging in recently, especially all the politics involved. But I guess if management has their political party, which they do, it's only fair that labor has their political party, which they don't. This union thing is here to stay. I just think as the unions mature, you're going to see more younger people at the head of these unions with less politics and more power to the people. These younger guys don't have the faith in unfettered capitalism that we do. So as they get older and start to take charge and, moving into positions of authority, it's going to be fascinating to see the clash of the titans, isn't it, guys? Anyway, big Fed stuff I want to talk about. I guess I'm babbling too long today. We'll bring that back tomorrow. By the way, we're going to put the investment thing up. I went ahead and invested $5,000, imaginary dollars, in the Fidelity index S&P 500 index fund. It's a $10,000 portfolio, $5,000 in the fund, $5,000 in cash. If you go to chuckbarone.com, we're going to put that up as soon as we finish the show. I'll be making adjustments to that portfolio from time to time, buying and selling, adding to the position or taking away from it. And I'm telling you right now, it's an S&P 500 index fund, so there's no razzle-dazzle there. And watch me, using the way I'm going to be trading this, I will beat the S&P 500, even using an S&P 500 index fund. Watch me do it. Anyway, guys, that's it for today. I really appreciate your guys' support. If you like what you're hearing, hit the like button. Share the videos with your friend. At least share my name. Let them get out there and check us out. Of course, your questions and comments mean the world to us, guys. We'll be back tomorrow. We'll get some data tomorrow. We're going to get jobless claims. So we know that's going to move the markets. Can't wait to see where it turns out. Till tomorrow, guys. Take care. Thanks.